levels by nearly 400 points. Manish Sonthalia, CIO, Emkay Investment Managers, is now with us on the show. Manish, it's all great when you've got an SIP going, but what about for direct investing into stocks? At these levels, where pretty much everything is at an all-time high levels, valuations are racing, what would you bet on?
I think wherever valuation comfort is good, those are the areas where there is a greater inclination to add on to investments. I would believe two clear areas would be technology and pharma. Add to that financials. These are three clear sectors where there can be, money parked, even at these levels, for the simple reason that, I think now on a broad macro basis, it's not so long into the distant future that you can see rate cuts, you won't see a rate increase. Iran has not stepped into the Middle East war. There's 30,000 crores worth of fresh pension money from US likely to come into India. So obviously, you have these positive tailwinds. Added to that, the valuation discomfort that you saw in Tata Technologies IPO yesterday. It's pick and choose, but it's all about, individual stocks.
Tech earnings have bottomed out because you are saying there is comfort in adding to technology now. They've gone through a long period of earnings downgrades. Has it bottomed out?
Well, broadly, Q3 is going to be a soft quarter. You would have furloughs, etc. But markets would look through all these numbers, is basically waiting for a trigger when there's going to be a rate cut. And I think previously it was believed that rate cuts in the US would begin, let's say, after a hiatus of 1 year. But now that waiting period has got shrunk down to 6 months. That's the base opinion that we are working with. We have seen all of that positive rub-off effect on the NASDAQ components as well. And I think in our case, in India, we have seen similar effects on the technology pack. It was undervalued if you was to consider slightly medium to long-term view. And I think it's building up on that. It's not going to be about immediate Q3 numbers, but what's likely to follow in FY25.
Give us names, Manish. Good afternoon. Where should you said pharma, tech?
Look, I can talk about stocks which are there in my portfolio. I can talk about, let's say, we talking about relative valuation to something like a Tata Technologies. Give or take here and there, 700 crores of profit for FY24, translating to 1,000 crores profit for FY26. Similar, industry, engineering, R&D, L&TTS, would be a 2,000 crore profits for FY26. Now, if you were to assign a 50 to 55 PE multiple on Tata Technologies for FY26 numbers, and if you were to put a similar multiple for L&TTS, you would get 1 lakh crores of market cap, which essentially means if we are at 4,800 rupees stock price today, this number should be a 10,000 rupees stock price. So this is one name which I'm betting on, purely on account of the fact that I would have similar or better visibility growth on this name than Tata Technologies. And I think if the entire sector is getting re-rated, you would have Alexis and Science of the world, or your Tata Technologies, etc. Then why not this name? So this is one name to reckon with. And I think for fiscal, or let's say calendar 24, domestic pharma would be a name to reckon with. And everything is going to get re-rated. Two strong names in this space is Ipca and Alchem. And valuations are very benign given the visibility on growth. I think these two companies again are due for a major re-rating, and I would have them in my portfolio.
Okay, got that. Manish, hi, good afternoon. Let's get your views on the other recent listings. Flair Writing is up 50%. Then there was a Gandhar Oil, which had a dream start as well with a 70-75% pop. And then IRDEA, a PSU company receiving such a warm welcome on the street as well on day one itself, right? So do you think the kind of exuberance these stocks and these listings have seen, is it justified? Did you like any of the stories?
Look, renewable financing is going to be a big theme. Of course, the whole bet is on renewables between now and 2030, and every agency in this space will get a major re-rating, not only on account of growth, but also P re-rating. So I think IRDA has seen a bumper listing, but please remember, IRDA is only a refinancing agency. Of course, they are only to do with renewables, so of course there is a re-rating that they have got. But I am more comfortable with names like, let's say, PFC or an REC, where the balance sheet is very good. These are valuations which still about a few weeks back were trading at 5-6 prices to earning multiples, 4% dividend yield, and spectacular growth ahead of them. So within this whole refinancing or let's say financing space of energy, not only renewables but even thermal and so on, I would bet on a PFC. They seem to be on a more benign valuation, and of course, REC is a subsidiary of PFC, even though the managements are different. But my biggest bet would be on PFC. As far as the recent listings are concerned, I don't know. I mean, given the way the P ratings have happened on listing day, just too much of money chasing few of these names. I would not bet on any of them. But yeah, I mean, again, within this whole consumption, I would believe that in the run-up to, the central elections in 2024, sooner than later, you will start seeing populist measures come out. And of course, that would mean a booster for consumption names, both discretionary and staples. And this is one space where, again, there is not too much of an upside movement in the last 2 or 3 quarters. So maybe again, the consumption names are something to watch out for. But otherwise, other than this, nothing majorly attractive for me as far as the news are concerned, even though they have had blockbuster listings.
All right, Manish, we'll leave it there. It's a pleasure. Thank you very much.